I saw the other side of the coin. We talk about thought lines on the show, right? But the thought line of, I actually think I'm optimizing for fear. I actually think I'm optimizing for this like ego expectation that this huge exit's going to happen. And then I'm like the next Elon Musk kid. And that's like the furthest thing from what I actually want, which is like authenticity, sustainability, being true to my family, being true to others that I serve. I mean, that's just a very different thing to optimize for.
Welcome to another episode of the At Depth podcast. This is the show where we sit down with leaders, entrepreneurs, investors, operators, you name it. But we have one simple purpose. We're here to explore the through lines that connect what we value to how we lead, invest, and build. My guest today is an investor, operator, and founder. He has spent time on both sides of the spectrum. He's been building venture-backed companies at scale and ultimately choosing a very different path. It's a path rooted in what he calls quiet wealth, intentional living, and aligning money with the life that you actually want. What I really appreciate about this conversation is Morgan's exploration of self-honesty. The moment where success on paper no longer matches the life that he wants to live, he makes a change. It wasn't a reactive change. It's about discernment, taking some imperfect action and moving towards a life of quiet investing versus loud investing. And he's going to talk to us today about building wealth in a way that allows you to not lose yourself along that way. So let's get going. It's time to find our depth. Does your better half sit there and appreciate the quality of effort that you've put in? Are you the sole foodie at this point?
No, she appreciates it very much. I think I kind of won her over a little bit in the early dating days. You learn these little things to attract your person, right? And for me, I'm like, well, yeah, I could go to some expensive restaurant and try to like wine and dine you, but frankly, I'd rather show you like who I am and like the intentionality behind doing something like making a really cool meal. So actually, funny story. This is not podcast like stuff, but here we go. At my second date with her, I'm like, I'm gonna cook for her. And I decided on this like 3-part little menu. I made some French food. I was like hacking it together a little bit, but it was pretty good. But I like wrote the menu out and I decided, you know what? If I'm taking it there, I might as well take it all the way. And so I ended up talking in this ridiculous, like half French accent the entire night. She thought it was hilarious. It was so bad. I can't even I don't even want to hear a recording. It would have been so bad.
I love it.
But she brings it up to this day because she's like, this is the most creative thing. It was so funny. 9 years later, she's still here. So something worked.
What is your thing? If I could say, hey, Morgan, I'm going to give you 48 hours starting on a Friday morning. Where are you going to go? What are you going to do? And then after that, you could talk a little bit about what you do for work. We're going to start with fun first.
Yeah, it's a really good question. I mean, I think it's evolved over the years, right? Where I am today, I'm waking up and like the first thing I want to do is like hug my 2 little daughters, right? I'm just very like driven by that. I've actually been working really closely with a coach to like kind of anchor the feeling of the love I have for my family and my daughters into intense business situations, like almost as like a belief competitive advantage, if that makes any sense. But I don't want to miss that part of my day because it's so important to, I think, anchoring into like the intentionality of what I'm going to do any given day of the week, right? I think as the weekend rolls in, I want to be in the water surfing. Or maybe I want to go for a dive. I live in Southern California. We have these beautiful kelp forests, much similar to like what a regular forest would look like, but underwater. And you can go into the water. We're close to where I am in Laguna Beach. You'll see octopus, you'll see lobsters, fish. I mean, I've seen sharks out there. Sometimes I've had to quickly get out of the water because I've seen sharks out there. But something like that, being like very aware of nature and like showing up in that kind of place is really fun to me. But it's also a vehicle for thinking, for evolution, for adaptation. I make a lot of decisions in my life on sort of the principles of biomimicry. If nature's had 3.8 billion years of evolution to think about what's the best way to solve this problem in the world, be it creating abundance, be it, whatever you're trying to do, housing density, whatever. You can look at things that are sort of one in that chapter. And I find almost every time I go out in nature, my sort of biological priming comes back to think about those sort of things. So that's going to be a key part. There's going to be some good meals on the table that weekend. I'll probably cook one of it and I'll probably go someplace I can't even pronounce to have some more. That's key. Got to have some good coffee, right? And just spending really intentional family time. That's like a 10 out of 10 for me.
Most people in business, especially in the deal space, aren't ready for joviality, especially if you're an allocator. Like
Yeah.
if you're coming, hey, we're thinking about putting money in your deal, that's just all buttoned up. And there's nothing more
Mhm.
fun than disarming people and just saying, like, hey, man, tell me about you. Tell me about your kids. Tell me about your life. Did you have a good day this morning? Did you have a nice cup of coffee? Was it cold? How'd you sleep last night? Anytime you can engage someone on that level, I think it does two things. One, it reminds everybody that the dollars are the dollars and the people are the people. If you're a scoundrel and a skunk, you've got that order way whacked out. And it's always going to be about the dollars. It's always going to be like, beware of people who only care about money.
Yes.
Watch out for
Totally.
those people.
Yeah.
Like, look for people who are
Yeah.
like, look, this is my job. I love it. I love it for more reasons than just the money. Like, I would probably pick this anyway. And then, hey, I've got family, I've got kids. Like, I understand what it looks like to maintain a long-term intentional relationship.
Yeah. It's like you can carry the grace and the personality, and it's not mutually exclusive to
Right.
also problem solving and to being a good human being and finding your way through while you prioritize everybody, the needs around and make the best situation, right? It's not a mutually exclusive decision.
It's not.
That a
It's
lot of
not.
people, I think, treat it like it is. And you show people leadership example, you show people maybe a better way to, interact or in alignment with how they might feel. And that's where you attract a tribe.
You've kind of been in the trenches. I would love to hear you talk a little bit about your story and how you've implemented this in the professional sphere. Like, how have you succeeded and failed with people, and where has that led you to today?
So my story, dates back. I'm a kid from New England, followed a traditional path and kind of realized somewhere midway through boarding school, this is not how I want to live. I mean, I
Yep.
get it. I really like this is a structured upbringing and this is tried and true and all these things. And there's a benefit in higher education. And I leaned in heavily to that. But also, I just never felt like the constraints of the job market really would work for both the type of ambition, but also the type of impact that I sought to bring into the world. For me, I always looked at business as being a force for good. How do you apply conscious capitalism lens to do well while doing good? And for a long time, for me, that meant sustainability, using as a business as a tool for sustainability. And I found myself down the road of working towards a hardcore headline exit, those 100x Sequoia backed, like that kind of thing, with all of the lifestyle that comes with it, which is you go and raise the round. And I've been lucky to have some very, very large pre revenue rounds on these companies. But all of a sudden, you have 15 venture capitalist groups that are saying you need to be in Chicago tomorrow, Miami by the midday, and then you're up in Seattle. And all of a sudden, I found myself on planes, away from my family, away from this whole community that I built in Southern California, which is where, at this point I had rooted for a long, long time for what, like decent income and chasing a headline exit. And there's a certain point where I caught myself on a flight. We just raised a Series A round, almost $120 million series, a huge, huge round
Yeah.
in the food system. Very, very high potential, very exciting time. And I am back and forth Sunday night, every Sunday, to go out to Boston from LAX, there till Thursday, like the bags under my eyes. Like you imagine, right? And then I'm back on Thursday. And then guess what? I got to get back, for the Monday morning meetings, which means Sunday flight. And my wife, Teresa, was like, I did not sign up for this, dude. What is
Oh,
this?
oh yeah.
I saw the other side of the coin. We talk about thought lines on the show, right? But the thought line of I actually think I'm optimizing for fear. I actually
Yes.
think I'm optimizing for this like ego expectation that this huge exit's going to happen. And then I'm like the next Elon Musk kid. And that's like the furthest thing from what I actually want, which is like authenticity, sustainability, being true to my family, being true to others that I serve. I mean, that's just a very different thing to optimize for.
Really healthy minded people, they sit there and go, I've played this forward. I don't really know that the value prop is there for me. And then they take a huge bold step, just like you did, and they say, we've got to course correct, and maybe it's got to be
Mhm.
drastic.
Yeah.
Oftentimes it's not, though. Interestingly enough, you can just kind of
Mhm.
like start steering it,
Well, but it's drastic in a sense that it could totally challenge that person's identity. They might be the person that does this, the person that dominates at X, and suddenly even a subtle shift is like it's like a crisis, right? Oh, who am I? Like everything comes into question, and that is such an uncomfortable moment, especially if you don't like process through what that feels like. That
Yes.
a lot of people, I think, just choose. You know what? I can't even imagine what that would be. I can't even go that road. I need to stay in my path, right? But maybe it's not what they really want. It's a damned if you do.
Let's pick up the story there. So
Yep.
you reached the moment of discernment.
Yeah. My moment of discernment, I was probably 8,000 feet up and climbing above LA on a usual, like the JetBlue people like knew my name at the gate. You know, I was doing this so much. And I caught it like it was the most beautiful day in September. Like the sun is shining. All my friends are at the beach. My wife is at the beach. And I just realized, like, here I go for another week onto a coast where I don't really know anybody. I'm gonna have to eat kind of crappy food. Like, I'm not
Mhm.
gonna feel good when I come home. I'm gonna be here 3 days and then turn back around and do it again. And
Mm,
like, why? What am I doing here? This is not.
yeah.
Not only is this not my life, this is an inherited life. This is something that I think I learned from my family,
Mm.
which is not a bad thing because I was set up to have a very fortunate life with the opportunities that I've had. But I had to really face that and go, do I want that to go to my kids? And do I want to be that myself? And the answer, as painful as it was on that flight, was no. I have to take everything that I think I've learned over the last, at that time, I think it was 20, 27, 28, and basically put it aside and
Mm.
decide to step into a totally different set of shoes.
How fast did you move? And maybe describe the process so that people, anyone listening to this in a discernment moment can maybe not be
Yeah.
freaked out by the thought of it.
Yeah.
And you can
Yeah.
say, it's okay. Morgan did it. You're going to come out alive.
Yeah, I think that how fast can I move? And for anybody in these moments, like the power of imperfect action is your friend here, because that's what's going to help you build the bridge to the you 2.0.
The power of imperfect action is,
That's going to be the thing that bridges you to the next version of self.
oh my gosh. Okay. Keep going. That's a profound thing.
For my story, that's all I had in that moment was, well, what else? How can I just start some other road?
Are you serving a client base that represent the kind of person you want to be in life?
Mhm. Yeah, absolutely.
Because that is a through line right there.
Mhm.
A
You're
big one.
totally
Like
right.
I look at those people, the people that I serve, my clients, the people that I take money from or get money or make money on are the kind of people that I want to be, gives you
Mhm.
an inherent alignment, right? So we don't even need to
Yes.
look at like the cap
Mhm.
stack necessarily to see like,
Yeah.
well, generally speaking, Morgan's going to end up in the same side of the beach as all these people. So probably not motivated to do things that are outlandish and crazy.
That's exactly right. It's so funny you picked up on that, but,
Yeah.
a lot of what you do in my stage of business now and how you serve clients too, you're saying, who are the people that resonate most? Who are the people that I can serve best? And when I really think about who that is, I look at different chapters of my life. I think where
Mm,
there are resonant points, but the people that resonate best with me these days, they're not just founders and entrepreneurs that are looking for the financial vehicles that I can offer the income outside of their ventures, the, quiet wealth compounding and tax approach, whatever. It's like people that are very, very intentional, that
mm.
their biggest flex is not like drive the Porsche 160 miles down, like show up for your daughter on a Tuesday at 2 o'clock and watch her play. Like that's the flex because the fabric of what we are standing for and enabling is so much deeper than a superficial outcome or a double digit return, even though that's what, these investments could provide.
What is quiet investing and, quiet money?
Yeah.
What are the key characteristics of quiet money?
So everybody loves this underdog story and these, against all odds. And it really,
Yeah.
a lot of times, it really is that.
Oh, and they're awesome stories.
And
They're
they're
the cool
awesome stories.
you want that guy to talk for an hour.
but they do not weigh well on your personal relationships, your mental health. I mean, it is
Yeah.
just, I've been there, done that, got the t-shirt, don't want anything to do with it. And yet the other side, this quiet wealth strategy, yeah, it's almost like you're the least exciting person at the cocktail party and the most secure. Like there's this
Yes.
feeling of, hey, this stuff is working for me. I sleep well at night. This is backed by durable assets. Is this going to 10x my money in 3 years? Absolutely not, unless you're like insanely lucky or something crazy. Like, but can you pretty reliably work on doubling it every 3, 4, or 5 years? Like, yeah, there's not a lot of miracles involved in that. It's just hitting the ball down the fairway and doing it again and again and having enough courage to try that, right? To like try a new strategy, maybe if you haven't done this kind of investment before. It's interesting. I got asked this question this morning for a column that I do some writing for. Is all investing gambling? And I was like, like absolutely positively not what I do, but there's a lot
Yeah.
of investing that is gambling. And the way I thought about it, I was like, gambling requires hope or luck, right? Whereas, like, if you underwrite something like the types of multifamily investments that we allocate to, we're looking at affordable housing. It costs more than twice the amount to build new than it does to buy. And as a result, you're going to have a perennial affordable housing shortage. You make great rents. You go and scrutinize the rent roll, scrutinize the market, meet the tenants, talk to the property managers, look at everything, run cameras down the plumbing line to make sure that there's no funny business. I am surprised if that thing does not 2x in 3 to 5 years. Whereas the gambler is not surprised. The gambler is just hoping. It's a whole different thing. And in some cases, those big venture back swings, they require a lot of hope. They require a lot of luck. You can make the best modeling in the world and still completely strike out, or you could home run. And that's what makes them amazing stories. But stories sometimes are stories, right? And I prefer to invest in something real and tangible that I can control. So that's the kind of quiet money growth I look at.
I will never forget the first real estate investment I made was a little strip center. Uncle Al gave us a little strip center, a little tiny strip center on 1604 in San Antonio. And he drove us over there. Oh, good old Uncle Al. I mean, he's like, look, we're going to buy this. It's a little mom and pop operator. We bought it on an 8.3 was the cap rate.
Okay.
But that cap rate was based on 60% occupancy.
Wow.
Because mom and pa just, they were kind of losing interest in the project. They hadn't fixed the sign. The sign was broken. They'd stopped paying the landscaper like 2 years ago. The parking lot was cracked. The spaces were worn out of the paint and no one wanted to be there. And he said, look, we're going to go buy this thing. We're going to fill it up. And the concept was great. I said, great, awesome. We're going to go over there. What a cool little real estate project. The moment I realized kind of what this asset class was the drive that we took to get there. It was like the drive that we took all the time for like a music lesson that we had in San Antonio. And it was a drive that I made it frequently. And it was just like, oh, that's right there. That thing that I'm going to go invest in is a part of my life.
Yeah.
And I have actually been over to the shopping center on the left and I've been over to the strip center on the right for different things. And I realized like I've passed this thing. And so when he's talking to me about what we're going to do to it, it's meat and potatoes. We were talking about cooking earlier, right? It's like, here's the deal. If we get fresh ingredients and we don't screw them up, chances are we're going to have a delicious meal. It's the same exact principle with real estate. It's just the obvious stuff. Do you want to go? Yes or no? No. What makes you not want to go? It's junky. The glass is broken on the front. It looks like a derelict building. Okay, well, that's one piece of glass that we need to replace. All the others are fine. They just didn't replace that one. They left it for the past 2 years, and that makes it look like a derelict building. If we fix that piece of glass, is that going to make you want to come to this building? Maybe that, but then the sign. And you can just walk down a logical path to where finally you can resolve all the problems that say, hi, now do you want to go to this building? So we sold that thing 2 years later at a 6 cap on 99% occupancy.
Oh, you guys did so well on that. Some of the real returns in this also are when you can have that level of familiarity in other markets, when you can kind of tune it to your risk reward profile, your demands on growth versus cash flow, your expectations of growth versus, maybe like more affordability and staying that way, right? And being able to get into those. And if you can have that same thing, we're just going down a stroll in a neighborhood I know in San Antonio. But now today we're in Cleveland and I've learned this market. And I know that just kind of the way, even though I'm out of state, I've been there enough. I've talked to enough people. I've mapped out where the developments are. I have that kind of confidence in this market. And you find your way to those kind of patterns where you can rinse and repeat on the strategy and curate it to something that makes sense for investors based on what they want.
All these cities aren't that unique anymore. Like they have a little unique piece, but what happens is that someone comes, like a restaurant chain, and they say, like, we're going to do this by this kind of building in these 6 cities. And then you have a developer come and be like, good, we're going to put multifamily 4 miles away that's like class A or class B, and this size and quantity, same thing inside all these cities. And you can almost predict what you're going to see next. There's a beauty to that from an investment standpoint because it's like, oh, great. Like, you know how that does in the 9 other cities. And this one's for sale in Nashville. And
Yeah.
you have a nationwide comp to get you started. So, like, conceptually, I'm not going to waste my time looking at a dumb thing. We know it works.
That's a really, really good point. Even more so now when the franchisees and the different groups that have access to so much demographic data say, well, we really need a Chipotle over here based on check, 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 check. And then all of a sudden the Chipotle goes, you know what that neighborhood's going to look like in 2 years. You know exactly what it's going to be. Right. And
It's the Chipotle test.
Yeah. The one that we sort of tracked though, like in LA, we'd look for art galleries, yoga studios, and the inevitable avocado toast stand. The minute the avocado rolls in, that neighborhood is fundamentally over from what it used to be. It's going to change drastically. It probably already has at that point.
It's brilliant. So let's go a little further. I want to get a little further into your diligence brain here for a second, if we can. Let's imagine it's here. We've got the yoga studio, avocado. They just put that in. We got avocado toast, big sign.
Most of them don't even have a sign. You got to know. You got to be on Yelp.
You got to be on Yelp to know they've got avocado toast for you. Let's say there are 3 properties behind the avocado toast. You look here to your left, and there's like a 25-unit multifamily that was built in, let's call it 1980. And then let's go over here, and on the right, you've got brand new, super glassy. We'll call that, class A. It was built last year by an architect who knew what he was doing. And then in the middle, you've got kind of your I'll call it like your 2010, and maybe looks like student housing. It was back when they were like, kind of making them look like townhomes. It's still apartments.
Yeah.
Cool, cute little colors, and maybe like a little wooden fence. Tell me how Morgan starts. Which one are you getting excited about? And is there one that I'm missing that's over here a little further to the left that gets you more excited?
It's a good question. And I actually don't get as obsessed with the building itself as I do with the structure of the deal. I'm obsessed with not losing money and buying really, really, really well. Like that's like the barometer for all of this. So any one of these could be a deal if bought extremely well. But I look at it as sort of, there are 2 ways of generally buying a good deal that I've seen in real estate. One is like, tends to be a mom and pop operator. There's things that need to be improved with the building. They haven't capitalized to do it. If you can come and capitalize to do it, you can raise the rent significantly. Sometimes they're just willing to let it go for a little bit of a deal. Like those could be really good opportunities if you can nicely control your costs. You really know that you can get the rents you want to get and you can buy it for a really good price. That's like Avenue 1, right? And that could be that 1978 25-unit building. You tend to see those setups a lot. But what we're seeing more and more of these days are sort of not like operationally intensive buildings, but ones that just have a broken capital structure where someone bought them 3-4 years ago. Their loan from 2021 is like a 3% loan. And now it just adjusted. And now they have to pay 6.5. And all of a sudden they're cash flow negative on the building. And it's really probably not worth any more than the loan value because they overpaid a little bit when everybody was rushing into real estate because we all thought inflation was going to be 40% a year or something like that. Yeah. And so that's actually a really good setup today because maybe that thing could be the 2010 building that like doesn't have maintenance issues. And like you'll net $4 out of the $5 of what comes out of that, as opposed to the 1981 where you'll net maybe 1 out of 2 or 2 out of 3 of the dollars. It could just be structurally broken on the cap stack where you can go in and say, you know what, seller, I think you see this now maybe a little bit more like a liability than an asset. That loan is not feeling good and the adjustment is now taking money out of your pocket. And if you have a number of these situations in your portfolio, you're probably having to think, which ones do I want to keep and which ones do I want to lose? And so that's a really, really good setup for that kind of thing. But then over all of this, I'm going to then look and say, well, what are the themes that make sense today? People need to, I think, look at the fundamental stack of things that are happening. And we get so caught with the headlines every day. There's some crazy, a tweet sends a market into a frenzy and like interest rates, this and that today. It's just like, wow, it's hard to even figure out what's real. Right. And I get anxiety from it too. And then I have to look and go, no, trust the fundamentals. I mean, I literally have this written down on a sheet. When in doubt, look at the fundamental. I like look at this sheet sometimes just to remind myself where in America you have a housing shortage. I don't care about there's 500,000 more sellers than buyers in the affordable housing arena, which is workforce housing or lower income housing. There is just a fundamental deficiency that is going nowhere. There are millions of missing housing units at a certain level of the market. And they really aren't building a lot more of them. And this is only going to intensify because where rates have been the last several years has basically caused construction and the new starts in construction to fall off a cliff. Where now, in the coming few years, if you think about a construction project that starts, maybe takes 3 years until you have the thing that you can live in, we're not going to see very much construction at all in the next 2, 3, 4 years. So when you already have a housing shortage, you have a demand for housing, and then you have essentially no new construction coming online. What's that going to do? Just basic laws of supply and demand. That means there's less rental housing available, which increases the rent. And when you increase the rent in real estate, the property values tend to go up by a lot. So it's just a basic fundamental equation, back to the quiet wealth thing. I don't need some crazy hockey stick projection. I just need to look at some basic fundamentals and say, well, if you buy today, in a couple of years, that thing's probably going to be worth a heck of a lot more. We're going to use some pretty cheap leverage to buy about 2/3 of that. Let's raise the rest in equity. And, let's try to get everybody 20 or 25% annualized. That's a really good target. Can't promise it, but not a lot of miracles have to happen with the right conditions. And the conditions, the recipe in the soup, the first taste, it tastes pretty good. So that's what we're setting up for.
It's an interesting time because you've got people that have been whipsawed when interest rates were low.
Yeah.
I know a lot of those people. Those are my friends and family members. And the ones that I appreciate the most are the ones that look around and say, like, yes, we built the model on a low interest rate for that deal, but you can still build a model for a deal on a high interest rate too. So they haven't lost faith in the whole class.
Mm-hmm.
They just got snookered by the timing. And then all the great real estate investors actually kind of either tried to get fixed rate loans or didn't over lever to where it's like, oh yeah, brilliant person sitting there saying like, we can go up to 8% on the interest rate. We'll still be cash flow positive, maybe barely, but like we're thinking about holding this thing for 30, 40 years. Like if we have to sustain a 10-year period of higher interest rates, it doesn't make much money. Who cares? We know it's going to whipsaw back. Like interest rates, the more drastic they get, the more drastic the flow. So we could easily come back down and go put new debt on this thing when interest rates are back down at 2% or something.
Totally.
There's flexibility, I think, in the quiet style of investing too. And there's flexibility within the fundamentals.
Yeah.
Right. But not to say people would sit here and say, oh, why are you going to buy real estate? Like people are moving around or I'm trying to think of all the good things that people have said. Why not real estate? Oh, your money's locked up for a long time. Oh, interest rates are high. It's like, you can build a model.
Totally.
To suit the interest rate environment. That's fine. Get your debt to equity ratio right. And you with the rents and like, you just don't overpay for it. Like you said earlier, like just don't overpay.
And you tend to even set yourself up for surprise upside at some point when the rates are declining. But one thing I want to unpack on this one too, because you mentioned timing, right? And I know people too that went really heavy into the cycle and, it's been more challenging, right? I think there is a heuristic on, well, who would have guessed interest rates will rise? I call BS though 100% on that heuristic because I remember what it was like in 2020 and 2021. And then they started printing a lot of money. And it's sort of like systemically, you can look past cycles. You can read Howard Marks's book, Mastering the Market Cycle. You can unpack anything Ray Dalio does, and you can see that history rhymes and that when a lot of money is printed, inflation tends to happen, rates tend to have to cool the economy a little bit. And that moment, back to that plane flight that I took when I said, I got to change things, I shortly after that raised a fund to acquire 20 multifamily properties in affordable Midwest market, all of them being very distressed properties. We went to work on these properties. We turned them into government sponsored Section 8 housing for the most part, get checks from the government. They pay a little bit above market in the place. We built it as a cash flow fund, targeting 0% appreciation for a 10-year cycle. And we went to go get a loan on it. And we had the option in 2021 of getting 3%, 5-year, whatever. They could do a 7-year. You know what I got, Ben? I got a 30-year fixed rate loan on the portfolio. Right before the call, we just sold our 8th property, and I just take them out and I sell them one by one. We made 144% on the last sale. The average of the previous 7 was 105% to investors, mind you, in a time when not a lot of people had been selling, structurally, the rates, all the problems, but by being very conservative with it, it's just a different outcome, right? And so it's evidence that you can make money in any market. If you just, again, look at the fundamentals, you say, well, sure, maybe the last 3 years of debt's been really, really cheap, but why should we think that it's going to be that way for the next 3, right? And that's the edge.
I think the title of this podcast just occurred, Quiet Fundamentals with Morgan Keim.
Ooh, I like it. I like it. Maybe I should start a whole podcast just called Quiet Fundamentals. I've been on the drawing board.
Oh my goodness gracious. Well, there you go. We do a lot of naming of things over here at Pivotal, on the Pivotal side of my business. So I would say give that one a lot of thought and play with it.
I love that. Well, it's better than sending my guests progressively hotter chicken wings and asking them questions to see.
Dang it. I thought about doing that. Someone said to me, they're like, oh, Ben, you should call it hot depth. I'm like, hot depth? I'm like, what do you mean? They're like, you should go into sauna and you should have the other person you interview should be in a sauna and you're in a sauna and you should do your interviews while continually turning up the heat. I was like, yeah, maybe that's a cute idea, but that's not my personality.
Very progressively Swedish of you to go in that route, but
very Swede. That's more for my wife and my kids who have all the Scandinavian names.
That's amazing.
If someone wanted to jump into your world and see a deal, how would they go about doing that with you?
So in general, I mean, we keep a pretty tight group of investors. So I really value the one-to-one, book a call with me. Let's talk. I have nothing to sell you. I just want to create opportunities if they align on what we decide is right for you. If you want to do that, our site is oceanridgecap.com. That's oceanridgecap.com. We have a bunch of stuff on there too. We're trying to do webinars about the state of the market. I'm actually about to launch an investor quiz on there, which is going to basically guide people into what kinds of real estate investments would work based on their profile. That'll actually be at oceanridgecap.com/quiz. But I'm excited about that because a lot of people see real estate as a single asset class. The reality is there are debt funds, there are pref funds, there are equity positions in growth markets versus cash flow. There's just so many ways to play. And so actually helping people to see what's uniquely right for them is really, really important to me because I don't think it's a one size fits all. Oh, we found this deal, we should all buy it. It might have a totally different outcome than what you're trying to optimize for. And if I've learned anything my entire career, my entire life, it's optimize for the life you want. Don't just let fear or conditioning drive you autonomously into something that's not going to ultimately be right for the type of person you are. And so that's very much the approach we're taking there.
If I had a button that made a sound effect that went hallelujah, I would have that right. Final question though, if Ocean Ridge Capital was a flavor of ice cream, the good ice cream store next to the avocado toast, what flavor would you be of real estate style investments?
I love that. I think I'd be like a Japanese Neapolitan. Okay, I only say that because there's a place near us called Wanderlust Creamery, started by a Filipino couple, and they curate these flavors from around the world. It really appeals to the foodie in me. Japanese, because I think they're very intentional.
Yes.
In how they do things. And Neapolitan, because they're different flavors, right? In the Japanese Neapolitan, they have matcha, ube, and maybe there's a hojika rice or something it's really, really good. It's an awesome flavor. But, in terms of how it lands for us, I think of it as there's cash flowing real estate, there's sort of growth oriented real estate, and then there's also alternatives. And there's a more nascent platform of looking at these kind of unique alternatives that we're starting to get more and more into. I've invested personally in lots of different alternatives, from tequila barrel aging programs in Jalisco to We actually looked at a K-pop music royalties deal not long ago. It's funny you were saying that about
Oh,
your
yeah.
Nashville trip. That's like the spicy different flavor where you're like, you really didn't expect that, but it actually pairs really nice with the whole group because at the end of the day, you're creating diversification, you're creating cash flow, you're creating opportunity. Again, it goes to like intentionality. I love that question. That was very much like a spur of the moment answer. I'm glad it worked in real time because it could have been a failure.
The last podcast I was a guest on, they were going to have me sing My Way in the style of Frank Sinatra, and it just tanked. It did not go well. So I would say you handled that one beautifully.
Ben, will you put a link to that podcast in the show notes for everybody?
They're probably going to edit it out. It was the worst part of the whole thing. Morgan, thank you. Thanks for being here, and thank you for being willing to find depth with me. I really enjoyed this conversation. And thank all of you for listening to At Depth. You can subscribe on Apple Podcasts, Spotify, YouTube, or online. Visit the atdepthpodcast.com. We're making it easy. This conversation was really about discernment, about stepping back, asking what you're actually optimizing for, and then having the courage to choose differently. If that resonated with you, and if you're thinking about your own path in sort of a critical / discerning way, if you're thinking about how money shows up in your life, I would love to talk with you about that further, if it's helpful. Just shoot me an email, ben@pivotal.com. That's PIVOTOL. And I would love to keep that conversation going. Thank you for being here, and thank all of you for choosing to find depth with us.